So, and all these companies were mostly in the mid and small cap, characterized by a sustained growth, and there was a visibility of that growth rate going forward. Again, all of them were in single digits when we picked them up. So even in this market, what I'm trying to tell you is that even in this market, there are pockets of undervaluation. And of course, we need to steer away from anything that looks excessively overvalued.
Yeah, hello, gentlemen. Thank you so much for joining the call. Truly appreciate all of you. We want to have a panel discussion out here. So let me welcome Siddharth, Anirudh, and Jaimin. Thank you so much for joining.
Thank you, Vikas.
Thanks, Vikas.
Thanks. So the format is very simple. We have investors joined us from different parts of the world. So we have clients from Dubai, we have clients from Spain also, and of course the domestic investors have joined in. So thanks to ET Markets for giving us an opportunity to organize this panel discussion, and thanks to all of you for joining the session and agreed to share your knowledge and wisdom with our investors. So what we're going to do is, a topic that we have picked up is valuations. Well, everybody is kind of concerned about it. Those who made it, they are happy, but they are concerned that it's a time to book profits, or it's a time to kind of put more money. Let me first of all, let me introduce the panel and for myself, because I see some of them for the first time out here, and then we will deep dive into the topic. So with me, I have Jaimin Gupta. Well, Jaimin is a good friend. He has been generating, he's managing for more than 100 crores of his proprietary based funds, and growing at 30% year on year, specializing in SME segment. Runs a company and is also part of the Step Debt Services based out of Ahmedabad. I had a chance to have series of meetings with him where I saw the kind of conviction that he brings on the table when it comes to investing in SME. So thank you, Jaimin, for joining in.
Thank you, Vikas. Thank you for having me.
With me, I have an extraordinary fund manager, Siddharth Oberoi. He's been into markets for over 28 years. He has been managing public money for over a decade now, and ever since he has taken the AIF license, he has outperformed not only the benchmark but the entire industry peer group significantly. So, congratulations, Siddharth. Wonderful job. Able to deliver the deliverables in the hand of investors. Thank you so much. On the other side, we have Anirudh Garg. Well, he doesn't need any introduction. Some of you might have followed him on CNBC or various business channels like the Business, where I personally had a chance to listen to his wisdom. So he's a partner and he heads the research at INVASSET. He brings about, so there's something called human, and then there's something called algorithm, advanced algorithm-based quantitative investing. Anirudh is someone rare to find, someone who is able to balance both the sides very well. And when you have a combination of human plus the machine working, obviously the results are I would say only the miracle happens. The outcome is always great. The results are always great. So that happened with Anirudh also. If they, as a house, they delivered, double the benchmark for many years now, and able to deliver the sustainable returns over the past 4-5 years. But as a house, they have been doing this equities. They've laid down their hands in equities for almost 35 long years now. Since 1990s, they've been investing in equities, and because of some of their friends and families requested them to take license, they decided to make it more professional, taken the license from SEBI, and now running it professionally. And now that Anirudh has taken over, we're running it even more professionally and trying to conquer. So thank you, Anirudh, for joining the call.
Thank you for your kind words, Vikas. Thanks a lot.
So let's start with Siddharth first, because Siddharth, I see that I looked at your portfolio also, and I saw good amount of exposure to mid and small cap. This is 6 months back. So do you continue to remain bullish on mid and small caps, or you think valuation is a concern? or any other thought that you wish to add. Over to you.
Yeah. So the small cap space has been very promising over the last 2 decades. In fact, the best returns generated by in the market has been done by the companies which were small, and they migrated to become a mid-cap companies. So immense wealth has been created over the last 2 decades in this space. And you're right that a lot of our portfolio companies are small cap, and we see pockets of underpricing even now. So, just let me just give you what, the small cap and micro cap is basically, characterized by uh, lots of negative issues as well. First is scalability, then is probably management depth. These companies are usually one man shows. The promoters is one single person. So those are certain issues that one faces in the small cap space. Then there's the cost of funding, then the competitiveness, etc. So these are some of the issues. So historically, what has happened is that uh, the small cap companies used to get a lower valuation than the mid and large caps, but that has turned around post COVID. It's actually the opposite now. Most of these companies are getting valued very loftily. In fact, the past growth is now being extrapolated into the future, multiple years into the future. So there are pockets of overvaluation in the market, but overall, we are able to figure out stocks which we think have valuation comfort, and along with this, we are able to make a good portfolio.
Okay, great. Before I move on to Jaimin, my second question is to Siddharth. Is that Siddharth? You said that it's been growing at for almost 2 decades now. No denying on the fact that yes, it has been growing. But do you see? Let me ask you a particular question. From 2017 onwards, we saw the index, small cap index, going down. It became 80. Then you had GST implementation, RERA coming in, and then all that 80 became 60, and then 2019, all that economy issues propped up, and then when it started going up again, COVID came, hit the markets, and then 60 became 37 rupees. I still remember, and from 37 it moved up. Now, what do you suggest? What do you sense that? Why is it so cyclical? Number one, and number two, what is your message to investors on that?
See, the period that you are mentioning pre-COVID, it was about 17 to 19 period. So what happened was, as tomorrow is my presentation at your place as well, so I'm also going to explain. What happened was that again there was a lot of exuberance, and the multiples expanded rapidly, but the growth rate of this small cap was just meager, about 8 to 10%. And so what happened was that these bubbles occur from time to time. One of them, for example, is occurring right now in the maybe SME, IPO space, etc. So, but post-COVID, what has happened is that the growth rates of these small companies have actually accelerated, and the P didn't expand that much. As we stand, again, broadly everything is very, very stretched in valuation terms. But again, that's where the acumen of the investor stands, that if you're able to, from all these 5,000-6,000 small cap companies, if you're able to bring about at least 8 to 15, somewhere around that, companies which you think can grow at double digits, and the sustainability of those earnings is quite visible. So once you're able to figure that out and you see that the valuations are low, you make a portfolio around them. So you're right that we are getting very less stocks at this point of time, but they are not so less that you cannot make a portfolio out of them. Just to give you an example, when we started the AIF in December 22, since today and that day, we've almost bought and exited 80 stocks with almost a 95% success rate. So, and all these companies were mostly in the mid and small cap, characterized by a sustained growth, and there was a visibility of that growth rate going forward. Again, all of them were in single digits when we picked them up. So even in this market, what I'm trying to tell you is that even in this market, there are pockets of undervaluation, and of course, we need to steer away from anything that looks excessively overvalued.
Okay, understood. So let me go to Anirudh here. Anirudh, you've been running an award-winning family office by yourself, your own proprietary-based firm, the family office money that you're managing, which is pretty sizable, close to $20 million. My question to you is, how did you manage to crack this code of a quantitative approach and then giving a human touch to it and taking a right decision?
Okay. Thank you, Vikas. So, first of all, to answer your question that how were we able to crack it? There is, I believe, nothing as cracking something. The experience that you gain over time, if you're able to code it well, what happens is that when you are on the pitch batting for your investors, you know which ball to play, which ball to go. So whatever we've learned in the past 17 years of my experience and 30 years as a fund house, we've just coded it just so that when we as humans react to what market is presenting to us, we have back-tested data. We know that these things have occurred in the past. We know how it has played out when the markets are exuberant, when the markets are, oversold. So you get a multi-factor model, and you do not rely on the unifactor models to determine something. When I joined in 2006, I remember people used to say buy at buy below 18 multiple, sell about 25 multiple. That is, I'm talking about the PE ratio of the Nifty. And then if you get it under 12, you sell your house and invest. Yeah. Then we saw that from 2008, post 2008 till 2020, we did not get PE ratios below 18, so the markets were not investable. So I believe that you have to make multi-factor models. Firstly, they should not be based on one approach, not be based on one human being. Different people bring in different thoughts, and quant has the ability to club them together. So when you have a Hawkeye view, you know what is happening and what is the most prudent decision to take. On the other hand, I believe what quant does is that it does not restrict you to the top 200 companies, which majority of the houses are fixed to. If you are in those 200 companies, you will get return of that 14-16%. But at INVASSEST, we focus 1.5 to 2x of what the Nifty is delivering. So if you need that kind of return, you have to, get out of your comfort zone and look in for the future leaders. So yes, I think quant is, for us, quant is just our experience, our values, our systems, our learnings translated into a code, so that when there many times as humans, I personally, a code which is made by me, I want to go against it. But then it tells you that, okay, there is no point because this is the risk reward ratio, this is the probabilistic cause.
Sure. I'll go to Jaimin. Jaimin, while Anirudh had a kind of history which he can refer to and then back-tested data. But for you, Jaimin, you started investing in SME, which is something picked up only in last 2-3 years, more particularly 5 years. And you generated 30% CAGR returns over the last 6-7 years for yourself as a family office of Chanakya. Now, my question is, how did you manage to do this?
So, first of all, thank you, Vikas, for having us. And I'll also like to thank Siddharth and Anirudh for being on the same panel. Now, to your question, so usually SME companies जो होती है ना, वो छोटी companies होती है, उनको study करना थोड़ा easy है, इतना difficult नहीं है. उसमें उसके future aspects को judge करना कि वो future में कितना grow करेगा, that is a big challenge. Now, lastly, हमने 5-7 years से जब से हम SME में invest कर रहे हैं, यूजुअली क्या था, पहले SME का जो मार्केट था वो बहुत छोटा था, उसमें मतलब ज़्यादा कंपनीज IPO नहीं आते थे, इतनी लिक्विडिटी नहीं थी, पर लास्ट 2 ईयर्स से वो लिक्विडिटी बहुत ज़्यादा बढ़ गई है. अब जो एक 500 करोड़ का मार्केट है, उसके अंदर अगर 5,000 करोड़ की लिक्विडिटी आ जाएगी तो वो ऑटोमेटिकली मार्केट बहुत ज़्यादा आउटबर्स्ट होगा. तो अभी SME में ऐसा सिनेरियो आया है कि जहाँ पे मार्केट ही पूरा 500 करोड़ का है और उसमें 5,000 करोड़ की लिक्विडिटी आ गई है, इस वजह से ये आउटबर्स्ट हो रहा है. लेकिन जब ये 5,000 करोड़ की लिक्विडिटी सस्टेन करती है, वो कंटिन्यूसली रहती है, तो वो काइंड ऑफ अ न्यू प्राइस डिस्कवरी हो जाता है. मतलब वो काइंड ऑफ अ नया मार्केट खड़ा हो जाता है. जो 500 का मार्केट था, वो मार्केट ही 5,000 का हो गया. सो SME के अंदर उस चीज़ों को जज करना, उस चीज़ों को समझना बहुत ज़रूरी है ओवरऑल पर्सपेक्टिव से कि वो कैसे ग्रो करेगी चीज़ें. सिर्फ कंपनीज के ऊपर ही डिपेंडेंसी नहीं रह जाती, वहाँ पे प्रमोटर्स की बहुत सारी चीज़ों की डिपेंडेंसी रहती है, बिकॉज छोटी कंपनी है, वन मैन शो है, एंड फंडिंग भी बहुत टाइट चलती है इन कंपनीज के अंदर. सो हम उस चीज़ों को थोड़ा अच्छे से जज करते हैं. हमारी जो एनालिसिस की टीम है, रिसर्च की टीम है, वो उनके कोर में जाके चीज़ों को समझती है, उनकी प्रोडक्ट्स को, उनके सप्लाई को, प्राइसिंग वगैरह XYZ चीज़ों को समझ के फिर वी टेक दैट इन्वेस्टमेंट कॉल्स.
Great. So before I move to Siddharth with my question, I'll come back to Jaimin again. क्या हो रहा है इसमें जो ये QIBs हो रही हैं इसमें इतनी सारी अभी मॉर्गन स्टैनली ने रिसेंटली किया और इनफैक्ट सम ऑफ द लार्ज फंड हाउसेस आर पार्टिसिपेटिंग लाइक HDFC. तो ये सेगमेंट में आप बता सकते हैं कि वैल्यूएशंस को लेके काफी कंसर्न निकल के आ रहे हैं इन्वेस्टर्स के, बट आपको क्या
एक्चुअली वैल्यूएशंस कंसर्निंग नहीं है, यहाँ पे वैल्यूएशंस बहुत जस्टिफाइबल है, इसीलिए इतना इंटरेस्ट आ रहा है QIBs का. सो अगर आप देखोगे तो अभी कोई भी IPO आ रहा है प्राइमरी मार्केट में, मतलब प्राइमरी मार्केट्स में सारा 12 के P 15 के P पे आ रहा है. अभी लार्ज मेन बोर्ड पे कोई भी कंपनी, अच्छा कंपनी 20 के P नीचे नहीं मिलता है, मतलब बहुत देयर आर वेरी रेयर कंपनीज जो 20 के P के बिलो हमको मिलेगा. सो मोस्ट ऑफ द कंपनीज हैव स्टार्टेड ट्रेडिंग अबाउट 20. यानी ये ऐसा हो गया है कि मार्केट ने ऑलरेडी एक्सेप्ट कर लिया है कि 20 का P इज एन आइडल P, जो पहले 12-13 का P होता था. बट SME में वो P अभी भी 12-13 का ही है. सो प्राइमरी मार्केट में जब कंपनी आ रही है तब उसका IPO 12-13 के P पे आ रहा है, उसकी लिस्टिंग हो रही है 2x प्राइस पे या 2.5x पे, तो वो शायद 25 के P 30 के P पे फिर ट्रेड कर रहा है लिस्टिंग के बाद. लेकिन प्राइमरी में जिसको वो माल स्टॉक परचेज मिल रहा है, जो भी QIB को, वो तो उसको 12 के P पे मिल रहा है. तो मतलब जो राइट प्राइस होता है बाइंग का, वो वहां पे दिख रहा है. IPO के टाइम पे जो IPO का प्राइस है वो राइट प्राइस है और रिस्क फैक्टर कवर करने के लिए. वो प्राइस को इनकैश करने के लिए वी आर सीइंग अ लॉट ऑफ पार्टिसिपेशन फ्रॉम QIBs, फ्रॉम रिटेल आल्सो, एंड एंकर में भी उतना ही पार्टिसिपेशन आ रहा है, क्योंकि एंकर में वो शेयर्स QIB को IPO प्राइस पे मिल रहे हैं. अब जब IPO प्राइस पे हम बाय कर रहे हैं तब तो 12 या 13 के P पे बाय कर रहे हैं. फिर उसकी प्राइस डिस्कवरी जब हो रही है लिस्टिंग के दिन, तो वो 2x पे हो रही है और वो 25-30 के P पे ट्रेड करना स्टार्ट कर रहा है. तो मेन रीजन कि QIBs क्यों इतना पैसा लगा रही है, उसका मेन रीजन कोर, मतलब अ सिंगल लाइन आंसर वुड बी बिकॉज द स्टॉक इज अवेलेबल एट 12 और 13 का P एट अ चीप प्राइस.
Sure. So Siddharth, do you also as an AIF manager, do you also participate in QIB, and do you also look at some of these companies from SME segment?
Yeah, so we don't look at SME. So in our case, we have a threshold that we in the AIF don't invest in companies which are lower than 1,000 crore market cap. And so we did our own stress test to see how liquid we are, and we figured out that we can liquidate the entire portfolio in 2 days. So we go into very liquid names where the entry and exit is easy and the impact cost is low. So that's our threshold. But just an anecdotal evidence of what is happening. So if you just do like Jaimin was talking about this reasonableness of the IPOs. So in our estimate, the average P ratio of the IPOs that have come out recently is about 35. This is some of them are very excessively priced, 75. Some of them are 18 to 20. But this is not cheap IPO, you can say, it's coming out of the last 1 year. So the aggregate is very expensive. Again, these are small companies, like one-man shows and lack depth, and the competitiveness against large peers is also very low. So these, I think that there is a lot of overpricing, and like Jaimin said, that that has become the high has become the new normal. But eventually, I don't think this kind of a high valuation is sustainable. I mean, I've been in the market for 28 years. I've never seen the sustainability of these high valuations in the microcap space over long periods of time. So.
Okay, so
yeah.
Do you also, before I go to Anirudh, my question to you, Siddharth, is when you have Cat 3, you have up to 45%, I believe, you can participate in unlisted space also. So
no, yeah, we can, but we don't participate. So ours is a long only fund, which we do go for QIPs, but we don't go for unlisted stocks.
But you do participate in.
Yes.
Okay.
Yes.
Okay. So Anirudh, if you can throw some more lights on how do you construct the portfolio, the total number of companies that you feel quant is giving you some sense, or you decide that I will have 25 companies or I will have 50 companies. Because risk is one aspect that obviously you look at very, very carefully.
Yeah, okay. So I believe that, so how I see the markets from the last 30 years that I have followed them, I see that they are basically divided into two parts. Markets have a tendency to pick up stocks from the dirt and turn them into diamonds. We have seen it time and again, and that is how bubbles are made. Back in the if we start pre-Harshad Mehta, I need a minute for it, if you're up to it. So pre-Harshad Mehta, we had an old economy run in which all the Apollo Steels and ACCs of the time were given valuations that could not just, we did not see those highs for the next 10, 12 years. Then the tech boom of 2000, then the capital goods and real estate boom of 2008, and then the technology, FMCG, and private sector lending boom of 2020. So it keeps on oscillating between the new economy and the old economy, primarily due to the fact that I told you that the diamonds have turned, your dust has been turned into diamonds, and the valuations, they become unsustainable. And the relative change. Now, what has happened is the relative change goes in the favor of the other segment. For example, let me give you a quick example. Back in 2021, I believe Kotak Mahindra Bank was trading at 6 price to book, while the likes of SBI were trading at 0.5 price to book or 0.7 price to book, somewhere near that.
True.
Now, what has happened is that over the period of time, the valuations of a particular segment have gone up, where they've become the most expensive in the world. The other ones, though there is no comparison between the two, the other ones have declined to a level that they are not sustainable in terms of the downturn as well. Relative change has happened in favor of the public sector banks. Say the NCLT laws have come in, they have been capitalized. They have started for the next 3-4 years. We can expect that they won't do reckless lending. And the sectors that they tend to, primarily the main reason, the sectors that they lend to, corporate sectors like steel and all power and capex, all those sectors are revising. So this is what happens. It's a combination of valuation and a combination of relative change. You have to assess that. That is what the quant does for us. So when we are in a value run, like we are in currently, we'll have somewhere between 25 to 40 stocks, because the number is increased a bit because they're more volatile in nature. The beta of these stocks is more than the market. So currently, I would say the beta of our portfolio is 1.5, around 1.4 to 1.5. While in a new economy run, which is a quality run as compared to the current value run, our beta is generally 0.8, 0.9. So we'll have around 25 stocks in that. So it depends what run we are in, what phase we are in, how expensive the markets is. So we classify market in 4 quadrants: value, growth, quality, and safety. When we feel that the markets are expensive, the number of companies would go up. When we feel that the markets are really oversold, the number of companies would go down, and we'll concentrate a bit more. Yeah. So it depends upon what phase of the market we are in, and we take decisions accordingly.
Sure. So you have a particular style. For example, when I looked at your portfolio, just starting point of the railway stocks, when it started moving up, I saw that it was already part of your portfolio, and also some of the PSUs. So I want to check and read your mind. How do you manage to do so?
See, it was very, very clear. As I told you, let's continue from the last question. As I told you, the valuations of one sector is too much, and the valuations and the relative change for the other is very, very favorable. So we saw that the relative change in capex and capex oriented sectors had to come. Why? The government is just going on. The GST was implemented well, and the government was going for a capex drive. So in an old economy run, it is either that interest rate sensitives will perform, or the capex and capex oriented sectors will perform. This is like time and tested over various economies throughout the world. So for interest rate sensitives to perform, you have to have global growth and global inflation under control. Both were not available this time. End of 2021, we had the Fed inflation problem, and the global growth owing to the US-China conflict and China +1, they were all good for India, but they reprimanded the global growth. So both these factors were not there, and that is why we did not see interest rate sensitives performing that well in this old economy run. But on the other hand, the Indian government got that trump card where they started going in for the capex spend. They took current capex spend is around 11,000 crores. Back in 2013, it was somewhere around 2.5 lakh crores. So all this has to be absorbed, and the best part is India is in desperate need of capex. We need roads, we need railways, we need airports, we need defense. We cannot import defense for a very long period of time. We have the biggest coastline in Asia, and always, hostile neighbors. So somewhere we have to, as I used to say in my company, that how long can you order from Zomato? You have to start cooking at your home, and that is what has played out. So that is why we had all these companies from the very starting. But every company that we held had relative change working for them.
Great. Jaimin, I want to know more from you about, you run CAT 2 and CAT 3 both. In CAT 2, we see the portion of unlisted is about 65%, if I'm not wrong. How do you structure the deal? Can you just give us one example?
So basically, CAT 2 is our Chanakya Opportunities Fund, in that we do 65% nahi hoga, but about 40% the portfolio is into private equity. And the main reason doing that deals is the pre-IPO deals. So basically, we go for pre-IPO deals only. Companies planning to go for an IPO in next 12 to 18 months. And we usually invest in companies who are going for an IPO in next 12 to 18 months. So hota kya hai, wo kind of a bridge funding gap ho jata hai. मतलब सपोज कंपनी 12 महीने से 18 महीने में जब आईपीओ लेके आने वाली है, तो वो 1 साल के टाइम पीरियड में उसको जो पैसे की जरूरत है कंपनी को ग्रो करने के लिए, वो फंडिंग रिक्वायरमेंट उसकी पूरी हो रही है प्री आईपीओ राउंड से. एंड वो 1 साल में वो जो प्रॉफिटेबिलिटी बढ़ाएगा या जो रेवेन्यू बढ़ाएगा, उससे उसका ऑटोमेटिकली वैल्यूएशंस बढ़ेगा 1 साल बाद आईपीओ के टाइम पे. सो अवर बेट इज ऑन द प्री आईपीओ वैल्यूएशन, जो यूजुअली आईपीओ से 30-40% कम के वैल्यूएशन पे मिल जाता है, क्योंकि वो फंडिंग से कंपनीज ग्रो भी करती है, काफी ग्रो करती है. मैं रिलेटिवली अगर एक शॉर्ट एग्जांपल दूं तो सपोज कोई कंपनी है, उसमें उसका महीने का 7 से 8 लाख रुपए का लाइट बिल आता है, यानी साल का 1 करोड़ का लाइट बिल आता है. वो करीबन 6-7 करोड़ का अगर ये डाल देता है, सोलर का प्लांट डाल देता है, तो उसका ऑटोमेटिकली वो 1 करोड़ का लाइट बिल का सेविंग बढ़ जाता है, उतना प्रॉफिटेबिलिटी बढ़ जाता है. तो यूजुअली ये कंपनीज इस तरह के कैपेक्स के लिए फंडिंग रेस करती है और रेवेन्यू बढ़े, दोनों चीजों के ऊपर फोकस करते हैं. सो प्री आईपीओ डील्स जो होती है उसमें हम इन्वेस्ट करते हैं.
Okay. So my last question to Siddharth is, Siddharth, this kind of outperformance has not been seen ever. I spent 2 decades in the industry, and you've delivered returns in triple digit in last 1 year particularly. So has Anirudh, and so has Jaimin in their AIFs. Now, my question to you on behalf of investor is, do you think it is repeatable?
So if all the returns is in the process, if we are able to be very, very cautious, very prudent in terms of investing, and don't lose our discipline at the most opportune time, I think the concept here is to beat the index substantially. So that's what our focus has been. So let's say the index does let's say 10%, then we can double or triple that beat. So that's been the focus. So everything is relative. If the market is itself going up at 20-25%, then you will see those massive outperformances. But if the market itself is growing at single digits, then then it'll be a little difficult. But our benchmark remains to beat the index by 2 to 3 times at least. So that's the concept of the investing here.
Sure. And what is the number of stocks that you prefer to hold in your AIF?
So right now we're holding 21 stocks in the portfolio, but they keep on changing. But probably 15 to 21. That has been the track.
And what would be the churning ratio?
So churning is very high. The churning is very high. So the portfolio is structured in a way that the core stocks, which is about 50 to 60%, remains so. I mean, we've been holding some of the stocks for the last 1.5 years since we started the fund. So there are those core stocks as well, and then there are special situations we keep going and coming out of. So that creates some alpha, which probably 10-15% of the returns have been generated through those special situations. So this is how the portfolio is structured.
Sure. What's the kind of churning that you believe, Anirudh, is good, or it is an outcome of the quant model that you run? Or it depends?
See, if we talk about the last 3 years, the stocks that we bought in November 2022, when our state changed, we kept on holding them till end January 2024. So around 1 years and 2-3 months of no churning, and then the entire portfolio has changed once. But I believe going into the future, and especially after this event, we believe that the churning in our portfolio will reduce drastically, because there are so many I would say products available now. Why do you do churning? Primarily we do churning just when we feel that the markets are expensive and our portfolio having a higher beta can go down much more. Yeah, but if you can reduce the portfolio beta through other means, now we have options available, and a lot of products are available. If you use them wisely, I think you wouldn't need to trim down your growth stocks that you feel till you feel that they have the growth opportunity and the relative change working in their favor. So yes, I believe at Invasset going forward, our churning would be very, very less. I think we would not be churning more than 20 to 25% of the portfolio in a year.
Sure. Jaimin, my last question, because we are running short of time now. So there are two things. One, how do you manage risk? And second, how many companies you have in portfolios, both Cat 2 and Cat 3? You are on mute. Yeah.
Sorry. So we have about 40-45 companies in our portfolio. Out of that, 20 companies will be having a long-term outlook, and the rest we are using for churning. So we have a very high churning ratio, and our cash position is also very high. हम लोग ऑलमोस्ट 50-60 का कैश पोजीशन पे बैठते हैं, उसे हम चर्न करते रहते हैं. सो बेसिकली हमारा चर्निंग का फंडा इज लाइक एन आर्बिट्रेज गेम. सो जहाँ पे कोई आप बड़ा रिटर्न एक्सपेक्ट नहीं कर रहे हो, आप 60 पॉइंट मतलब 60 बीपीएस 70 बीपीएस और यू कैन से अबाउट 150 बीपीएस के रिटर्न एक्सपेक्टेशन में 2-3 दिन में स्टॉक्स को चर्न कर रहे हैं. सो काइंड ऑफ हम QIB सब्सक्रिप्शन का एक ये चीज को यूज कर सकते हैं. हमने QIB सब्सक्राइब किया, 3 दिन बाद उसका एग्जिट होता है, लिस्टिंग देके दें. सो दैट इज अ 60 बीपीएस और 70 बीपीएस अर्निंग आर्बिट्रेज काइंड ऑफ चर्निंग. सो वी डू दिस काइंड ऑफ चर्निंग अ लॉट, एंड ऑलमोस्ट मैं ये कह सकता हूँ कि हमारा 40% का रिटर्न उससे जनरेट हो रहा है. लॉन्ग टर्म के जो स्टॉक्स है वो फिर सीधा 1-2 साल के होल्ड पे जाते हैं, बाकी का पूरा पैसा हम लिक्विड रखते हैं और उसको चर्न करने यूज करते हैं. सो रिस्क को कम करने के लिए जो हमारा बेस्ट कॉल रहता है वो ये लिक्विड कैश पोजीशन ही है, क्योंकि हम लोग इतने हाई कैश पोजीशन पे हमारे पास जो स्टॉक्स है उसके अंदर हमारा इन्वेस्टमेंट वैल्यू इज वेरी लेस, क्योंकि हम SME में इन्वेस्ट करते हैं. तो SME में क्या होता है, उसका मार्केट इतना बड़ा नहीं है कि हम एक कंपनी में 10-20 करोड़ 25 करोड़ लगा दें. उसमें हम एक कंपनी के अंदर 2 करोड़ 3 करोड़ ही लगाते हैं. सो हमारा रिस्क वहां पे बहुत कम हो जाता है, लिक्विडेशन फास्ट हो सकता है. एंड बिकॉज डाइवर्सिफाइड पोर्टफोलियो है सेक्टर्स के अंदर, कंपनीज के अंदर, तो वहां पे रिस्क बहुत कम हो जाता है.
So this 40 to 45 is what, Cat 3 or dono?
Cat 2, I'm talking about Chanakya, Cat 2.
And Cat 3?
Cat 3 we have about 15-17 companies. उसके अंदर भी सेम चीज है, 50% 60% कैश पोजीशन है, जिससे हम लोग चर्निंग आर्बिट्रेज, काइंड ऑफ एन आर्बिट्रेज होता है. 3 दिन बाद 60-70 बीपीएस का प्रॉफिट दिख रहा है और आज उसको डिस्काउंट कर लिया, दिस काइंड ऑफ डील होती है. एंड बाकी लॉन्ग टर्म स्टॉक्स है जो 1 साल 2 साल के होल्डिंग के हिसाब से kind of fundamentally very strong, having good potential, having good order books. We have a very high reliability on companies who have good order books.
Okay, with that, we'd like to conclude the session here. Thank you, gentlemen, for joining in. It was absolutely pleasure talking to all of you. Thank you so much.
Thank you, Vikas. Thank you.